Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings to reveal the real story behind the numbers. And today we've got a real interesting one from Intrepid Potash incorporated their quarterly report for the 30th of September 2025. Now you might think quarterly reports are just dry numbers, but sometimes they hold secrets about where a company is heading and what could happen next. Let's dive in and decode this latest filing. Before we dive too deep though, if you want more of these deep dives into financial filings, make sure you hit that subscribe button and check out our Discord community linked in the description below. Alright, let's get straight to the heart of it, the financial tables. First up, the condensed consolidated balance sheets as of the 30th of September 2025. Intrepid Potash ended the quarter with total assets of $616.5 million. That is up a bit from $594.5 million at the end of last year, so they're growing. But let's see where that growth is coming from. Inventory sits at $110.8 million, up slightly from $112.9 million at the end of 2024. This is a pretty significant chunk of their assets, so managing this well is key. And then we have their big ticket items, their property, plant equipment, and mineral properties clocking in at $334.1 million. This is a decrease from $344.3 million at the end of last year, indicating they might have sold off some assets or perhaps depreciated them down. Looking at the liabilities and equity side of things, additional paid in capital is $673.1 million. This often reflects money raised from selling stock above its par value. Now here is something interesting. They have an accumulated deficit of $160.4 million. This means that over time the company has spent more money than it has earned. This is not ideal, but it doesn't always mean doom and gloom. We need to see how their current operations are performing. Let's jump to the statements of operations to see how they did. For the 3 months ended the 30th of September 2025, they reported a net income of $3.7 million. That is a really nice turnaround from a net loss of $1.8 million in the same period last year. And for the 9 months ended the 30th of September 2025, they are even stronger, showing a net income of $11.6 million compared to a loss of $5.7 million for the same period in 2024. This is a huge positive sign, showing they are much more profitable this year. Overall sales for the 3 months ended the 30th of September 2025 were $53.2 million, a decrease from $57.5 million last year. This dip in sales, despite the profit increase, is a bit of a head scratcher. Let's dig into the segments. The Potash segment saw sales of $32.4 million, up nicely from $28.3 million last year. This is their core business and it seems to be doing well. They also sold more potash tons, up 15%, and got a better price for it. This usually means good things for their bottom line. Their intriguing trio fertilizer segment had sales of $18 million, down from $18.9 million last year. They sold fewer tons but got a much higher price per ton. This suggests maybe they are prioritizing profitability over volume on this product. Now for the big drop, the oilfield solutions segment, sales here were just $2.6 million, down a massive 74% from $10.3 million last year. This is where the lower sales numbers are coming from. It looks like their oil and gas business is really struggling. They mention a big frack in the previous year that boosted sales, and that simply didn't happen this year. They also see a trend toward recycled water use, which is hurting their water sales. Let's look at some per ton numbers from the Potash segment. For the 3 months ended the 30th of September 2025, average net realized sales price per ton was $381, up from $356 last year. That is a solid increase and a big driver of their improved profitability in this segment. For the 9-month period though, the average price per ton was $345, down from $387 last year. This shows that while the most recent quarter was strong, the overall year-to-date picture for potash pricing isn't quite as rosy. They explain this by saying prices were lower at the start of 2025, but then went up. In the trio segment for the same 3-month period, the average price per ton was $402, a big jump from $312 last year. This higher price is definitely helping to offset those lower sales volumes. And for the 9-month period, it was $362, up from $305. Again, strong pricing here, protecting their profitability. Looking at operating income, the company posted $3.3 million for the 3 months ended the 30th of September 2025, a big jump from a loss of $2.2 million last year, and for the 9-month period it was $11.6 million compared to a loss of $8.1 million. This clearly shows the company is back in the black and operating much more efficiently this year. Now let's talk about cash flow. For the 9 months ended the 30th of September 2025, cash provided by operating activities was $46.8 million. This is a decrease from $64.9 million in the same period last year. The report mentions a large cash payment received in January 2024 as part of their cooperative development agreement, which made the prior year look artificially high. So while cash flow from operations is down year over year, it is likely due to a one-time boost last year, not a weakening of current operations. In terms of investing activities, they spent $11.1 million in the first 9 months of this year compared to $25.5 million last year. This means they are investing less in new equipment and property, which could be a sign of caution or simply that they finished a big investment cycle. They also sold some investments in equity securities, which brought in about $2.1 million, and their cash position is looking strong. As of the 30th of September 2025, they had $77.8 million in cash and cash equivalents, up significantly from $38.6 million at the same time last year. This healthy cash balance gives them a good cushion. There is a significant point about a cooperative development agreement with Exto Holdings. They received a large fee of $50 million split between late 2023 and early 2024. They are recognizing this revenue over time as a stand-ready service. This deal seems to be providing a nice financial boost. However, there is a long-term receivable of $3.9 million related to this deal. On the debt side, their revolving credit facility is a $150 million line of credit. Importantly, as of the 30th of September 2025, they had no borrowings outstanding and no outstanding letters of credit. This means they are not reliant on borrowing money to operate right now, which is a very good sign of financial health. Now, for the risks and legal matters, there is a class action lawsuit alleging unpaid overtime for mine workers. This could get costly if they lose. They have not recorded any bad news yet, but it is something to watch. And then there is the ongoing saga with their water rights. A New Mexico court has significantly limited their water rights, and they might have to repay water they've already sold. The exact financial impact is still uncertain, but it is a big deal for them. They reported an unpermitted discharge of brine and recorded an estimated liability of $2.2 million for potential penalties. They also have a smaller environmental remediation liability of $0.1 million. This is a direct cost and a potential headache. On the safety front, they are working with mining authorities, but as with any mining operation, there is always inherent risk in regulatory scrutiny. So what is the big picture here? Intrepid Potash is showing clear signs of improvement, especially in their core potash business and their overall profitability. The shift from losses to solid profits in the last 9 months is very encouraging. They are generating good cash and are not burdened by debt right now, which is fantastic. However, there are significant risks. The massive drop in their oilfield solutions segment is a major concern. While their potash business is doing well, this segment's decline is notable. Their water rights issue is a cloud hanging over them, and the potential repayment could be substantial. The class action lawsuit and the brine discharge also represent potential financial liabilities. Looking ahead, their strategy seems to be focused on leveraging their potash strength and managing the trio fertilizer business effectively, while navigating the challenges in the oilfield segment. The significant increase in their average net realized sales price per ton for potash and tri-fertilizers suggests they are able to pass on costs and are managing their pricing well. They are also being very strategic with their capital investments, spending less this year compared to last year. This signals a focus on efficiency and possibly preserving cash. Overall, Intrepid Potash Incorporated seems to be navigating a complex environment with some genuine successes in their core operations and a healthy cash position. But the ongoing legal and regulatory challenges, especially around water rights and the environmental incident, are serious risks that could impact their future. What do you think about Intrepid Potash's performance and their future prospects? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community linked in the description for even more insights. Thanks for watching, and I'll see you in the next one.